So this is the candle. The candle is made up of the body and the wick. You can see the wick. Those are the smaller lines that are on top of the candle. You can see this long one here. This one has moved from here to this point here. This is the wick. You can see it here. This is the wick. This is another wick here. Okay. So a candle is made up of two parts: the body and the wick. Okay. So now the wick tells you something. Remember what I said, that the candlestick is the language of price. Okay, it's how price communicates, and it is your job as a trader to be able to know exactly the price, or know what price is telling you from the information you get from the candlestick, because price is constantly talking and it speaks through this candlestick, and it's your job to identify and know the language of candle. Now, when you see a wick, it tells you something. Now, first of all, what I want you to know that the green candle represents the buyers, the red represents the sellers. Okay. Now, the green candle starts when it starts. Okay, it starts from here. Let's say from here. Let's buy this candle here. So let's go at this candle here. I hope you can see what I'm doing now.
Yeah.
This candle here. Now, a green candle starts from position point A here and then closes above. So a candle will start from here and closes above its opening price. So green candle opens at one position and closes above it. But a red candle will open from here and closes below it. So an opening price of a red candle will be above, while the closing price will be below. See, above, we started here, closed here. We started here, closed here.
Which is here now.
I'm just talking about this candle here. So it's this one started here, this one closed here. That is a green candle. But a red candle will start flowing from here, and like this one here. This one started here, went up here, and then came down and closed down here. The wick tells you that price was once buying. For instance, look at it now. This wick here. This candle opened here. Now went up. Remember, up is buy. So it went up and then came down and then started selling and closed here. So that wick tells you that price once went up, because it will always leave a trace of its movement in the opposite side. This tells you that price once went to this point. If you look at all the wick here, this wick. Okay, let's look at this one for example. Price opened here, went down here, and then was pulled back up and closed here. So this tells you that this small place tells that in this small wick here, that the buyers pushed this price back. Because in a candle, in a candle or in a time frame or in a candle like this, for an exact candle, it's like there's a tug of war between the buyers and the sellers who want to have control over that particular market section. This is the current one. This is the current one that currently happening. This is the one that is happening. Price is at 2,119. This candle here is the current market section, the current market candle. Now, buyers and sellers are dragging who will end in full control of this exact section. So right now there is a serious fight going on. Who will end it? Now, depending on strength, if the strength of, depending on strength and other factors, because the other factors that also control how price definitely ends. So let's just talk about strength for now. If the strength of the buyers are more than the sellers, buyers will take over the market and definitely end the market section. Just like the previous candle you can see in the past. Okay? You can see in the past here. Here, buyers they didn't even give sellers chance. They started here, they moved, no for sellers not even have chance. Sellers they tried small and then moved small. So all this week tells you past actions of either buyer or sellers. If it is a sell candle, this week here tells you that buyers pushed it up. This one tells you that buyers say it was going up here. Sellers dragged it down, drag to this point here. Buyers now push it up here, and the market now ended. It's like a ring fight. Ring fight used to have timer. Once time now reach to that end of that time, now the time is over. At least for the next, it ended. Okay. You understand? But that situation ended with a sellers in full control and dominance.
And now sellers ended it here. Sellers still opened.
They still opened and still continued it now. Because sometimes whoever ends the previous one still dominates in the next one. Depending on the other person. Depending on the market force. The other person gets weak at some point and then hands over briefly to the other one. Then sometimes the market will still keep on going down. But think that price direction is either controlled by buyer or seller. Because the more sellers you have, the more you'll be having things like this, downwards movements. Because sellers are in complete control in this market. That's why you see that the price is falling. Because sellers were having more.
We are just going up.
Yeah, buyers were trying to take over. Like you can see that buyers try to come over, they reached there, but sellers when they don't agree, they pushed price down. Okay. You see. So, but this is to tell you that buyers are in total control. And in a market like this, you do not go and start buying. This simply tell me that this market is a complete control by sellers. Because you can see the movement from this point here, from this point A to this point B here. You can see that sellers were just giving buyers back-to-back defeats at each market session. Here. Even here, the buyers they won. It was a struggle. You can see how they struggled here. Small candles. They came here. Buyers came out stronger with a very long candles. They beat it. Yeah, they came out. They tried to come out here with a big, but still they could not resist. You can see the fight going on, and each of these fights, there will have been more sell candles than buy candles. So you see that the strength of the buyers are not. So it will be suicide to kind of start buying at the kind of at this stage of this kind of market onslaught by sellers. So it will be very unwise of that trader to go and be buying in this clear. So you go on the side of the seller and you sell. The reason that you look for a good position to sell.
Then you talked about position. How then do you know the position?
And that's what we are coming to. You don't rush from primary 1 to primary 4 when you not finish with my wife.
I swear. Because
there is positions and there is timing. There are timings you enter a trade. You don't enter. You say, okay, my click sell. You know you super a lot. Because for you, you might be having a small account and you just enter anyhow. You don't get screwed up. Understand?
Okay, but sorry, using this from example now. Maybe you want to, and you notice that buyers are really taking advantage of the market. This is maybe it's here now. This is the best time.
This is the best time to buy.
Okay. But when it's here, it's the best time to sell.
It's not as if I would say based on where it is or where it is. You understand? Okay, let's say you went and bought around this side. This whole thing would have finished you.
Okay. Because immediately you bought, these people
they took over.
Okay, but if you are lucky enough, maybe you bought from
but we don't do unlock in forex trading.
Okay.
We have to analyze and follow certain convictions, certain conclusions. We have to look at the chart. We are like scientists that we have to look at the chart, make findings, and then say, okay, this is what the price is particularly going to do at this position that price is at. So you don't just enter in based on luck. You have to make, if you like, if you enter on luck, and we are now doing bet Niger. So you have to enter for certain reason that you see that convinced you that okay, price is going to do like this. So based on this, just now will not make you either you buy or you're selling. Without that reason, you're just doing guesswork. So next we look at now is we have talked about the, let me go back to the types of charts. We talked about the line charts. This is the line chart. This just tells you of simple direction. You can see how they are. Remember, to the price moves in waves. So you see all the wave. So it tells you of clear price direction from here down here. You can see. So for this one, I know it tells you that you should not even be buying. You can see that this is a pure. This is a pure downward. This is a pure downtrend. And in Forex, one of the first rule is that you have to follow the trend. I told you about the three kinds of movements of price. Price can either be going up, which is called the uptrend. Another name for uptrend is called the bullish trend.
Okay, bullish. Okay,
bullish. Yes. Another name for uptrend is called the bullish trend. If I'm saying bullish trend, I mean uptrend. Understand?
Okay, so the down is bearish.
Bearish. You see how it's come back now as you're reading. What's up when you read?
So what of the sideways?
Now the sideways is called the range. The range. That's the ranging.
Okay, it doesn't have another.
It doesn't have another. The range. So you can see exactly what I'm talking about. Price. This is the line chart. We have the other one, bar charts, and then we have the final, the candlestick and charts. Very, very simple. Simple. Understand? This is the simple way to describe it. Then we talk about the three types of movements: the uptrend or bullish trend, the downtrend or bearish trend, sideways trend, or which is the range. These are the three forms of price movement. Price doesn't move in complex, just simple: up, down, sideways. You can see it here. Up, down. I will show you sideways very soon. So if we go back in time, let me even show you sideways. Let me show you sideways. Let me show you sideways. Let me show. Very simple. You can see it from here. Let me show you. This is sideways. This is sideways. Let me jump that one. This is sideways. It's not so. Okay. Okay. It's not. It's a simple. Now look at this. Look at this now. You can see that price is making the same direction, moving at a certain zones. That first one you saw was price move up and down, but this one price is moving up, here, down, up, down, up, down, up, down, down, up, down again. So it's clearly moving in a. You can see that this line even made it clear to you. It's moving in a range. So this is an example of a range market. This market is not good for trading for beginners. You don't trade market like this because it will frustrate your life and you turn back. You turn back to the village. You don't trade market like that. You trade clear. Trade clear markets. Clear trend market, either downtrend or uptrend. That's what you trade. So are you ready
for the next one?
Next topic. So we have talked about so many things today. Let's talk about now the forces of the market. Now,
Forces.
of the market. Now we're looking at support and resistance. Support and resistance. Price cannot travel in a particular direction forever. It's not possible. Okay, price cannot travel.
I said forces of the market
Yeah,
is one.
for now we're looking at support and resistance as our
Okay,
first
support and
as our
resistance.
first force. Support and resistance. That is the first force we're talking about. There are several forces of the market, but to talk about support and resistance.
Okay.
Now, support and resistance. Uh, let me put in a way that you understand. These are forces that tends to mitigate the direction of price. They tend to stop the direction of price. They are like gravity on earth. They are like the force of
Okay.
stop. They help stop things from going beyond certain
Control.
yeah.
Okay.
So they keep order in the market. They keep the market from just keep going in one direction forever. They are like the force of nature that keeps things from going up, or things go up, they bring things down. So they are like gravity in a short, in a better explanation. So support is and resistance. They act as barrier for price. They act as a hold up or a stopping place for price movements. Whenever price hits either support or resistance, price in most cases tends to change direction. For instance, now look at this chart. For instance, now, okay, you can see that this price at the first place was moving in a straight direction. Look at him. This price will move from point A here up here. Why did it now stop? Why did it now reach here? Why did it now reach here and suddenly stop? What happened? Why didn't price just continue bust this screen and just went up and to heaven? Why did it just bust the laptop and why? Why does it have to stop at this point? That is because at this zone, at this exact region here, at this exact region here, there is a force called
Support and resistance.
there is a force called, let me type it for you. There's a force called resistance. There is a force called the resistance. It's invincible. You can't see it.
So no matter how the market is, cannot exceed that point of resistance. Right?
No, it cannot exist at this time, but it can break through at certain times. Support and resistance can be either okay. Let me now. I don't want to just watch the class. I want to break it down so you get it one by one. So I know what I'm looking. You're asking me a feature question,
Yeah.
but I want to ask this question now later.
When you get to that stage.
That stage, yes. So they are everywhere in this chart. They are even here. They are even here. Let me showing them one by one. They are even here. They are even here. They are even here. I'm trying to. Okay, let me use another thing to identify it. This one is too big. Let me use another thing to identify it. Let me use this. They are here. Okay. They are here again. Are you seeing it? They are here. So, question that you should be asking me is that, teacher or sir, if this resistance is everywhere like this, as you just say, why didn't price reverse at any of this resistance at this point? Why is it that only here stopped price going up?
And because from here, even though it stopped,
Even though it reverse more, it continues. That's because although resistance can be broken, there are more stronger resistance that can actually change the general. Because this was a general direction of price, an upward movement of price. Understand? So all this resistance here, 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 and here, and here, all these general resistance here could not stop price. Even though they distorted price direction briefly, they could not keep price from going up. But when it got to a really strong resistance, what happened? Price came down. Understand? So, in other words, resistance can be two types. Can be either weak resistance or strong resistance. Hope you understand now.
Then
Was it answer your first question?
yeah.
Was it answer that first question you asked me? Was it answer that first question you asked me? You asked me if that was resistance stop price forever.
No, this explanation made it clearer.
Resistance can either be strong resistance or a weak resistance. Now remember there are two kind of force. Is the support. Now let's talk about the support. Now the support is what prevents price from continuously going down. Resistance is up, support is down. So resistance support is the force that stops price from going down continuously. And this is a general. This is a general. What?
Still catching.
This is a support. Price, if you check very well, if you go back in time, let's say we want to I don't want to destroy this explanation, but you can see this is the support. Let me just I will explain to you that we did in the chat. So this is the support. Now if you check very well, here was what resistance Abi. This place here now will be support. Once ever price break a resistance, our resistance become support. Watch here. His place was once a resistance because price moved from here, hit this resistance here, came back, hit support, and then broke it. Now what happened to this resistance here? It became support. Bam, price hit again, reached here, had issues here, broke it, hit this support, came down. There's the resistance here, sorry, support here. It hit the support here, went up. Now here became what? Support. It went up, hit this resistance, hit the support, broke it. You understand? So resistance can become support.
Okay.
If price goes above it, is now support. Remember I told you support is under, and is above. So if price breaks this one here now, this one here, if price breaks here now, what will now become here? Support.
Support, definitely. And the resistance will go up.
Will go up. So the resistance will not be above it, not below again. You understand? So, and now watch, price has definitely come back to this support here. So we are expecting price to either break or reverse back here. So this from this now we can actually guess price direction. You can do two things here. Now it comes down here, breaks this support. Before when it hits here, it went up here, hits here, and then go up. So it means that here is a strong support. So we're expecting price to either reach here and then reverse back and start going up. This is how people trade. You've used price past information to now be able to predict price future actions. This is what they call price action in forex trading. Okay. This is what they call price action in forex trading.
Action, you'll be able to predict what
From
the
the
future
past
is like.
years, from the past actions of price, you can be able to predict what the future of the next action price is going to do at particular zone. Because in forex, we are trading we're looking at zones, zone of interest. When you buy or you sell, you buy at zones of interest. Because I say you can't just come and buy anyhow, you can't just come and buy and sell anyhow. Someone that is trading support and resistance as their strategy will wait for something like, will wait for a strong support or resistance. Once price hits a strong support, okay, let's say now I was able to mark here as my resistance, and then when price came and hit here, I sold at this point. You understand? Sold at this point. All these would have been my profits. Now price has hit here again. If price has reached here now and price reverses, all this money that price will do here will be my profit, because at this point I was expecting price to buy and it bought. So we don't just buy anywhere, we wait for zone of interest. This is a zone of interest.
Okay. And as it progresses, it affects the price.
Yeah, as price moves, price is either going up or coming down. Just like dollar is now is falling down. That's why this is dollar. What happened now is that the price of dollar is falling against the naira. So on the chart you will see dollar falling.
So which means if dollar eventually collapsed, there is no way naira would be
Collapse as a how?
okay. For example, I think dollar to naira now is 1.15.
Yeah.
Abi? Okay, let's say tomorrow dollar becomes maybe equals 1 naira.
Okay, dollar becomes what to 1 naira.
Or let's just say 10 naira.
Okay, dollar becomes 1 dollar becomes 10 naira.
Yes,
Okay.
1 dollar equals 10 naira. So this will it still have like reflect
You
here?
still show in the chart that dollar is. You see that you see this was the highest of price. This was the high. At this point here, price was how much? 206.50. Now price is currently 200, so it has lost 650. It has lost a lot of money. This is 116, 650 to yeah. So if it goes down, it will be going down to 2,205. Then it will now enter 1,000 something, and that's how price is losing it. That price is losing monetary value. Whoever is even invested here, like in buying, if price drop, you'll be losing your own money, because as price is losing, you are losing your own money too.
Losing the stuff you
Well, unless you're buying or you, I don't know if you're buying or selling. Those are people that bought dollar when dollar was 1.7 will now be losing because dollar is now 1.5. So even go to sell it again, you will not get exactly 17 or 18. The only way you profit is if dollar rises to 2,000.
Then you can now
Make profit
sell
and make profit.
Okay.
So right now, if you go and sell, you actually have a loss
Because it's down.
because it's down. So it's exactly what you are doing here.
Okay.
You understand? So that's exactly what you're doing here in Forex. So this is it. Support, resistance. Okay? This is what they call price action in Forex trading. Let's talk about trend lines. Trend lines. How do we draw trend lines? Because one of the ways we do technical analysis in Forex is by drawing trend lines, by connecting dots, connecting points. The way we connected this point here, the way we mark this point as our resistance and support, we do that for trends. And because I told you the Forex doesn't just move in straight lines. It moves in waves, upwards, or upwards. So that waves creates a pattern that we can mark and then predict future actions of price. For instance, if you check where price went up, came down, rallied, went up, came down, went up, came down, went up. So this is a wave-like pattern. You understand? So your job as a trader is to mark those interesting areas, those similar patterns. Your job is to note those similar resemblance and mark it, and then be able to predict future actions from that pattern. Understand? So if price, remember I said an uptrend is an upward movement of price. You understand? And if price is going bullish, it makes up and down motion. Now, this up and down motion is called a higher high. A higher high. Okay. A higher high. Here is called a higher low.
You're capturing this again.
A higher high, and then a higher low here. Higher low. So same thing goes up. A higher high here, a higher low. A higher high here, a higher low. Understand? So this is a higher low, a higher high, 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 a higher low. I see. So you will now come and get your trend line character. This is your trend line character. Trend line. You can see it here. And you mark all the higher lows. Higher lows. You mark all the higher lows. You mark all the higher lows. You mark all the higher lows. This is how to draw a trend line. Okay.
So what of the higher?
You can also mark all the higher highs. But this will give you a channel. You can mark all the higher highs. It must not be perfect, but you know what I mean. Because these things are zones. They are not just straight lines. They act in zones. So they must not be exactly perfect, but this is what I mean. But what you're in an uptrend, what you're interested more in is not the higher high positions. because you remember you're not to sell at an uptrend, you are to buy an uptrend. So your interest should be on the support trend line. This is a support trend line. Sorry. This is a support trend line. This is a resistance trend line. So as far as I can also be in a slant position, it must not be straight, it can also be in slant position. This is a resistance. This is a resistance trend line. This is a support trend line. Now imagine if you were here, price made higher high, higher low, higher high, and came as higher low on this your trend line. What will you do? You enter a buy.
Because you've seen that
it has hit your interest of zone. This line you draw now is an interest of zone. Each time price hits on this your trend line, price reverses. You understand? That's how you get into an uptrend. That's how you dive in an uptrend. That's how you buy. That's how you buy. You cannot just buy anywhere. You wait for price to make it hit the interest point and then enter. You've already marked your trend line. Okay. Let's say we came when 1, 2, 3 has happened. Now we are waiting for the 4, number 4, 1 for the number 4 hits on this our zone. Price has hit our trend line 1, 2, or let's say we started when price was just forming this number 3, and we just choose our trend line. We drew it and to the future. Price has not hit here first. You understand? So we will now wait. Price will now hit our higher high here. We will not react. So okay, we will now wait for price to now come down here. Once it get down here and gives us a reversal sign, such as this, we'll just buy, and we'll take all this move as our profit. We'll now close when price gets to this top trend line, because at this point we expect a reversal, which price now did, and the price now broke the trend line. Because at every support and resistance can be broken on multiple touches. When support and resistance have been touched many times, at the time to come, it will definitely get broken. It's like cracking an egg. You can hit it sometimes, it's not big. But when you hit it more than 3 times, just wow. It's like in a wall. You might hit the wall the first time with a big hammer, it will not crack and anything. When you keep hitting that wall over and over, the time which to just pieces. So that's what happens to support and resistance in a trend line or in a horizontal zone. Each time a support is tested many times, or resistance tested many times, at some point it will get broken. So it was tested here, tested here, tested here, tested here. What now happened here? It broke out. And then let me turn this thing backwards. See, it broke out there, and then what? It reversed. Now it has started forming what they call a downtrend. Now a downtrend will form what they call a lower high and a lower low. Okay, you're having a lower high here. Let me write it here. A lower high a lower low. So you have more lower highs, lower high, so you see, so in a downtrend you have more of a lower high and lower low. You understand? And the same thing you did for trend line, you also connect the dots. 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 connect the dots. This is not a very good accurate downtrend, but let me just connect it for the future's sake. Same thing you did, you will also do. This not a valid trend line must have at least 3 touches. This is not a valid trend line, so I'm not. I should not be using this as a downtrend for down. It's not a valid trend line. That other one for option is very valid because it has about 3 touches, so you can make money from the 4th touch. I repeat, a valid trend line must have at least 3 touches. So this one is not a very much valid trend line. So we'll look for another. Let me go back in time and look for a more valid downtrend that we can. This is a valid uptrend. Are you seeing? There's a 1 touch here, there's a 2 touch here, there's a 3 touch. This is a valid uptrend. There's more than 1 touch. So this is a valid uptrend. So when you're looking for uptrend, once you see the 3 touches, you have a valid uptrend. Let me look for a more valid downtrend. So I'll give you an example. This is the exact session of this class. God forbid. Can you imagine?
And that was why I asked them, hope you're catching up to it.
I was thinking that it was even still. We don't move. Maybe we even stop safe. Hey, wahala. I can't even remember where we even stop safe. So
we are talking about the line, the trend line.
I hope I got the first part. That's my brain. So okay, I think we did this. We did this one. So this is for support. We connect to get our trend line. To get our trend line, we use the trend line this thing. We connect our dots, and that's it. Okay, so we're using our trend line to predict. But it's even good self. At least make you understand it very well. So we are using our trend line to predict the actions of price. So when price gets to this, each time price get to our trend line, it always reverses. There's some price hits here, reverse. Price hits here, it reverse. This is a simple way to know to know what price will do next. You understand? By tracking the actions of price. Let me give another example of it. Okay. An example. Okay, you can see here. Now the best trend line is when you have more than 3 touches. That's the best trend line to trade. There's not every trend line you can trade. When you have 3 touches, more than 3 touches, like for example, you have 1 here, you have 2 here, you have 3. This is the best kind of trend line to actually trade. By the time you have more than 3 touches, you cannot trade from the 4th touch. You understand? You have 1 touch here, you have 2nd, you have 3rd. You can buy from this place and catch all this move. Okay, so that's another example. Here it's a range. Range is very dangerous. See how it's doing jaga jaga. It's not even moving in any direction. You don't trade range. But here you can trade. This is a downtrend. Okay, you see how price hit here, fell, hit here, fell. You're having more than 3 touches here, so you can actually trade from this 4th one here. You can see if you are sold from here, you have made all this. Okay, so there is also another downtrend here, as you can see. And it's very sweet and clear. Very, very sweet and clear. Example of a downtrend. Very, very nice. Price reached here, fell down, came here up here, fell down again, came up here. One important thing is I tell you that support and resistance are not straight lines, they are zones. So even if I draw straight line here, doesn't mean that must be exactly where my price might stop, because it might be the spans are actually zones. They are zone, they are area. So that's why you can see that it's stopping here, because there is a zone here. This is a zone of hold up. So it's not a straight line. Don't see that it must be exactly where your stick. It must exactly where you draw. That's exactly where you must stop. You understand? it's a zone. So price reached here, dropped, reached here, dropped, reached here, dropped. I would have traded from this place. I would wait for price. I would have waited for price to get to this point, then wait for a rejection signal. You know, so let price stop buying, or sorry, stop buying and start selling. The moment I just see this red candle form, I would have just picked my entry here and made all this money. Make all this money. Same thing happened here. And I just entered from here. Once I saw this rejection, entered from here and make all this money. So that is how you draw a trend line and also trade the trend line. Okay, same thing happened here. 1, 2, 3. These 3 touches. I've entered from here and made all these profits. Price was buying. Remember I said earlier, you don't just enter because you see that price approaching your trend line. You have to wait for a reversal signal, and you have to reverse signal that shows that price is ready to change direction. You wait for this candle to form, a reversal candle to form, which is the candle opposite of the previous candle. If here was a blue, let there be either a reversal of a candle or a red candle form. So here I would have entered from here and made all this move. So that's exactly how to. I think that's where the example ends. Okay. So do you have any question to ask me?
I think when I go through it.